Palantir Technologies stock experienced a modest decline on November 7th as news emerged about an insider share sale, even though Wall Street analysts have continued to lift their price targets after the company's powerful performance in quarter 3. The pullback in Palantir's share price followed several days of volatility in the broader artificial intelligence sector, where investors have been showing caution and reevaluating high valuations that were driven by enthusiasm earlier in the year. This environment, often referred to as a risk-off sentiment, has caused investors to take profits in many technology stocks that had previously surged due to artificial intelligence optimism. The latest filing with the United States Securities and Exchange Commission, known as a Form 4, revealed that Alexander D. Moore, one of Palantir's directors, sold about 20,000 Class A shares on November 3rd. These sales occurred in several separate transactions, with average prices ranging between $202.63 and $206.60 per share. According to the filing, these trades were executed as part of a prearranged Rule 10b5-1 trading plan that Moore adopted on November 22, 2024. Such plans allow insiders to schedule future sales of their shares at predetermined times to avoid concerns about trading on non-public information. After completing these transactions, Moore still directly holds approximately 1,232,978 shares in Palantir. It is important to note that insider sales conducted through these prearranged trading plans do not necessarily indicate any change in an executive's or director's outlook on the company. Many investors and analysts understand that these sales are often planned months in advance and executed automatically when certain price or date conditions are met. Therefore, while headlines about insider selling can briefly weigh on a stock, they usually have limited long-term impact if the underlying fundamentals remain strong. At the same time, there was positive news regarding institutional ownership. South State Corporation, a regional bank holding company, disclosed an increase in its position in Palantir during the most recent quarter, according to a summary of Form 13F data compiled by MarketBeat. While the size of this investment is relatively small compared to the largest institutional shareholders, the increase reflects continuing institutional interest in Palantir stock. This ongoing participation from professional investors supports the idea that Palantir remains a key name in portfolios seeking exposure to artificial intelligence innovation. Following Palantir's strong quarter 3 report and raised revenue forecast earlier in the week, several major investment firms reiterated bullish positions. Bank of America raised its price target on Palantir to $255 while maintaining a buy rating. The bank cited the company's continued progress in monetizing artificial intelligence capabilities, along with its unique approach to scaling software solutions. Palantir's focus on artificial intelligence boot camps, the use of forward-deployed engineers who work directly with client organizations, and its ontology-based deployment model were highlighted as key advantages that differentiate it from competitors. Other analysts shared similar optimism, maintaining price targets in the high $100 to low $200 range. However, some remained cautious about Palantir's high valuation relative to other software companies. These analysts emphasized that while Palantir's growth trajectory appears impressive, its enterprise value to revenue and price to earnings multiples remain elevated compared to industry peers. This valuation gap could pose risks if the company's growth rate slows or if investor enthusiasm for artificial intelligence-related companies cools further. On November 3rd, Palantir reported financial results for quarter 3 of 2025 that surpassed market expectations. The company generated revenue of $1,181 million, representing a 63% increase on a year-over-year basis. Adjusted earnings per share came in at 21 cents, which exceeded analyst forecasts. In addition, Palantir provided guidance for quarter 4 revenue between $1,327 million and $1,331 million, which lifted expectations for the remainder of the year. One of the most striking details from the report was that United States commercial revenue grew by 121% compared to the same quarter last year. This growth is particularly important because it demonstrates that Palantir's artificial intelligence products are being adopted at scale by private companies, not just by government agencies. Many analysts and investors view this metric as the clearest signal that Palantir's artificial intelligence platform is gaining traction across the commercial sector. Palantir Palantir also highlighted several key developments in its defense and government business. During the summer, the United States Army consolidated numerous smaller contracts into a single enterprise-wide agreement that could be worth up to $10 billion over the next 10 years. While this figure represents the maximum potential value rather than a guaranteed total, it underscores the strategic importance of Palantir's technology in the Army's broader artificial intelligence and data infrastructure. The new structure is designed to streamline future contract awards and make it easier for the Army to expand its use of Palantir's software across multiple projects. In addition to its work with the United States military, Palantir has been expanding internationally. The North Atlantic Treaty Organization, commonly known as NATO, adopted a version of the Maven Smart system earlier this year. This artificial intelligence-enabled system helps provide faster and more accurate decision-making capabilities across member countries. The adoption of this system by NATO further strengthens Palantir's position as a leading provider of artificial intelligence solutions for defense applications worldwide. Another major development is Palantir's partnership with Nvidia, a company that designs and manufactures advanced graphics processing units widely used in artificial intelligence systems. The collaboration between Palantir and Nvidia focuses on accelerating the use of artificial intelligence for complex real-world challenges such as logistics and supply chain optimization. Investors are watching this partnership closely because it could open the door to additional commercial opportunities and enhance Palantir's reputation as a leader in practical artificial intelligence deployment. Despite all these positive developments, the broader stock market context remains challenging. After a year of strong gains for artificial intelligence-related companies, many investors have begun reassessing how much they are willing to pay for growth in this sector. This kind of valuation reset is normal after a period of rapid price appreciation, and even companies that deliver excellent results can experience temporary pullbacks as expectations adjust. Analysts have been emphasizing that the recent declines across the sector do not necessarily reflect fundamental weakness, but rather a shift in investor sentiment as traders move from enthusiasm to realism. Palantir continues to attract attention due to its unique blend of government and commercial exposure, but with that attention comes debate over whether its valuation accurately reflects future growth prospects. Some analysts have pointed out that Palantir's enterprise value to revenue ratio and price to earnings multiple remain significantly higher than most other software firms. This creates a situation where the company must continue to deliver exceptional growth to justify its current price levels. If growth remains strong, Palantir could sustain its premium valuation. However, any sign of slowing momentum could result in valuation compression. Short-term sentiment can also be affected by headlines, especially those involving insider activity. Although the sale of shares by Alexander D. Moore was pre-planned and executed under a formal Rule 10b5-1 trading plan, news of insider selling often leads to brief price weakness. Still, it is crucial to note that Moore continues to hold a large personal stake in the company, which reinforces his ongoing alignment with shareholders. Looking forward, investors will focus on how well Palantir performs during Q4, particularly with regard to meeting its revenue guidance range of $1,327 million to $1,331 million. Key performance indicators include the pace of new contract signings, growth in commercial artificial intelligence deployments, and the continued rollout of artificial intelligence platform features. Analysts will also monitor Palantir's ability to secure additional large government contracts under the United States Army's Enterprise Agreement, as well as potential collaborations with private corporations that could expand its commercial footprint. In summary, as of November 7th, 2025, Palantir stock has experienced a minor pullback that reflects both the broader caution in the artificial intelligence market and the short-term reaction to insider sale headlines. However, the company's fundamentals remain strong, analysts continue to raise their price targets, and Palantir's growth in both government and commercial sectors highlights its expanding influence in artificial intelligence. Investors now face a balance between appreciating Palantir's strong execution and remaining aware of its lofty valuation levels. How this balance unfolds over the coming months will likely determine whether Palantir's stock continues its long-term upward trend or consolidates as the broader artificial intelligence sector adjusts to new expectations. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.